Good morning everyone. Today we are going to start a new chapter. You will be finding very interesting. But before that, let's have 30-second meditation. Take off your specs. Take off your specs. Close your eyes. Fold your hands. Fold your hands. Take off your specs. Close your eyes. Fold your hands. Concentrate on Almighty God and express your thanks and gratitude for everything got in life. Take your parents' blessing by touching their feet mentally. Feel that all positive energy entering our mind, becoming stronger. Whatever we discussed today, we shall remember forever. Rub your hands. Touch your eyeballs, touch your cheeks and open with gentle smile. So, that was a 30-second meditation. It helps to increase your concentration power, and I told you that CM square means concentration matters most. The more you can concentrate is better for you. So, please stop other things which you are doing. Now, come to my class mentally, and you promise that whatever we discussed today you shall remember forever. Let us start. See, as you have seen, that today's topic is cash flow statement. Cash flow statement. What does it mean? I will explain it, but before that I can tell you that cash flow statement is one of the most important cash flow statement. So, everybody understands what is cash and how it flows. You understand what is cash and how it flows. You see, one of my teachers told me, he is an expert in accountancy, he is retired now, he has written lots of books. So, that teacher told me that, one of my teachers told me that cash flow statement, regarding this I told you a story also few days back in some other chapter. Mallika, please concentrate, don't do anything else now. It is very, very important. The more you concentrate, it will be an asset for you in the mind, it will be knowledge for you, you have to understand. With this 2-3 minutes you pass this, then it will, you'll miss it. I told you about a beggar. Did I tell you about a beggar, story of a beggar? So, he didn't have a leg, so he was fit for begging, and he used to earn from begging 50 rupees per day, I told you, and like that many beggars are there, lots of beggars are there in the world, but he used to save some money out of that 50 rupees. So, his monthly income was 1,500 and annual income 18,000. What he did, he managed, please concentrate everybody, please everything stop out, everything, you just concentrate, don't do anything now. This is very important, that is why I am telling you. Because conception must be clear to you, very nicely it should be clear to you, and I am going to do that. So, that beggar, he used to earn 18,000 and he purchased a rickshaw, I told you, and then he gave it on hire to some another person, another beggar who was fit, having legs and all, and that beggar, the second one, had the condition, the contract that he will pay 50 rupees to this owner, first beggar, every day, and what the rest is his income. So, he just went out this way. After another 1 year, his income was 72,000, no, 18,000 per year. So, 36,000. He purchased another 3 rickshaws. This way he went on, and now his income from begging is 50 rupees, assume, and from each rickshaw is coming another 50, 50, 50 this way. So, you see, within 2-3 years he becomes what you call as Lakpati. You know Lakpati Didi, as Honorable Prime Minister says about Lakpati Didi. So, he became Lakpati, but he was a beggar. He was a beggar. So, this is an inspiring story, this is a real story, but what we shall learn from it, what we are going to learn from this story. It matters how you manage the cash, it is not how much you earn the cash, it matters how you manage the cash. So, one of my teachers, I told you about, he is very expert in accounting. He told that business is nothing but using cash to get more cash and nothing else in the world. Business is using cash to have more cash, that is the only business. You think all over the world, you can think, and all these things are in between coming, all complexities of balance sheet and other things that you are learning, this is a part of the thing, but the very scratch, the root, everybody will follow, everybody will understand and support me, that admit it, that everybody will agree with me that Business is nothing but using cash to get more cash. If you do not have cash in hand, it's all meaningless. Suppose you have sold goods on credit, you have sold goods on credit, and this credit sale comes to trading account credit side, and your gross profit increases, and your net profit increases, everything increases, that is good. But if you cannot collect this money from the customers, you have sold, in account sale is increased, profit is increased, everything is done, but money is lying with the customers. What use? Is not helping you, but you have to sell on credit also, there is no doubt about it. You cannot deny that you have to sell on credit also, I do not deny, but you have to manage to get it first. We shall deal it in some other chapter again, these types of things, but here we are concerned with only cash flow. So, cash flow means how cash comes in and cash goes out, and there are two things, one is inflow of cash and outflow of cash. Everyone understands, it is very easy to understand, you do not have to have some lot of commerce knowledge for this, you can understand it. One, what is how cash is coming in? Cash comes in known as cash inflow, and cash going out is known as cash outflow. And how we can manage? Think of the beggar, how he managed. Those who have come late, you can please see this recorded video, I will share, so that you can cover up the earlier things. This is a very, very important chapter I am doing, and regarding chapter today only, I will show how this helps in management. In management, when you will be in your manager of company, you will be in the management, and how this matters, and many people ignore these things, how cash comes okay, cash goes okay, normally people are going that way, many people. But think of that beggar who earned 50 rupees per day, and how he used it, and he became lakhpati, you know, what you purchase 7-8 rickshaws later on, and one can do it. This is not a only fiction, this is a real story, and you can have lots of these types of real stories, there are lots of there, I can cite a lot, and you can also understand there are many. So, it all manage how you, do you know how much money came to your pocket? Can anybody answer this question? How much money came to your pocket and went out? Who can tell me? You will take 10,000, 15,000, I will say maybe 50 lakhs, maybe 1 crore came to your pocket and went out. Count it, starting from birthday gift, starting from when you were a very small kid, 5 rupees someone gave, those money came and went and came, and this way. Anyway, so this happens in business. If you do not know how to manage the cash, there is a very good chapter, you know, management of cash also. I am not taking that here. Management of cash is also a very good topic to discuss, and can be a beautiful session, but that way I am not doing, I am just giving the touch. What I am having in mind, you should know, but not in the course, I am just talking little bit once again, maybe in future you shall understand, oh, I know it like that. But my main topic is this one, cash flow statement. We shall make a statement and show how cash is coming in, how cash is going out. And cash flow statement, you know, we divide the activities of the business. I will show you later on. Let me talk this way only lively. We divide the activities of any business into 3 parts. I will show you, do not worry. I will give the PDF also, do not worry. No need to be busy with writing and everything like that. So, 3 types of cash inflows are there, and 3 types of cash outflows are there. Inflow, outflow put together you say cash flow. So, 3 headings we can put in the cash flow. Number 1, operating activities of the business. Operating activities, no need to be busy with writing, I will give this. So, operating activities means business is doing something, any business does something, purchases goods, produces, sells, collects money, gives credit, collects money from debtors, then takes credit from creditors, pays money, pays electricity. This is the normal thing of any business, any sort of business. Do not say a particular type of business, you think of any sort of business, these things are there. This is known as operating activities, or you can say here whatever cash is flowing, you can term, try to remember without writing, you can term cash flow from operations. You can say cash flow from operating activities, we can say cash flow from, I will be showing this thing total to you, and I will take very least amount of time later. Now you understand, just give stress to your brain. So, cash flow comes from operating activities, you can say cash from operation or cash from operating activities. What does it mean exactly? What were you doing in the business? What about you doing in the business? What have you done in the business? You are purchasing something, selling something, paying expenses, maintaining accountant, paying him salary, giving salary, electricity, rent, all these things, purchasing, selling, all these things, operating activity, production, all these things, operating activity, right? Try to imagine. And then next, financing activities, one more, financing activities. You need to have finance, money. You have a business, you need money. If you give money from your own business, it is capital. You give money from your owner's equity is capital, you know, but you take loan from outside also. And remember, there are different types of business. One is sole tradership. Sole tradership means you are only one owner. That balance sheet I have taught you only. I have taught you only sole tradership, nothing else. There may be one partnership, then more people are putting money and then sharing profits, a partnership. And one may be company. Company may be again private limited company, public limited company. If you want to ask the difference, let me not take now, this is a different chapter. So, private limited company, public limited company, whatever be the type of company, company collects money by sale of shares, sale of equity shares, sale of preference shares, issue of debentures, taking bank loan, all these things, company collects money for financing the organization. This is financing activities, do not say financial, a lot of difference. The same word seems to be, but you have to know. Many people confuse this way who are not clear about the concept. Financial activity, everything is financial activity, you can say financial, but financing, this is your business, you finance, give the money, that is financing activities, understood? Financing, ing, activities. So, what comes here financing activities? You collect money by issue of shares, issue of debentures, taking loan from bank, loan from other people. You can sometimes take public deposit. You can announce that if anybody deposits money with my company, I will pay them interest and refund the money after 2, 3, 5 years, whatever. It is public deposit. You can take that also. You can do many things to collect money from the public, from the anybody. The financing activities. So, I have told you two activities. One is operating activities, you remember? Operating activity, you remember? What is operating activities? You remember, Rahul? Operating activities? Running the business, selling the goods, purchasing those things. And financing activities, collecting money, finance. And the third one is, can anybody say? Investing activities. You collect the money, then invest. You collect the money, invest. Now, there is some difference between operating and investment. There is some difference. In some other chapter, I have told you differently, and you can also understand. If you purchase some raw materials and some electricity bill or rent, this is not investing in this definition. This is only operating. But if you purchase a building, if you purchase furniture, you putting fixed asset, you are suppose putting the money in a new project, putting the money in machinery, these are investing activities. Investing activities. Otherwise, see, in operating activity money goes out, in investing activity also money goes out, but don't confuse, there is a difference. Everything does not come in PL account, you remember, that you also remember. Temporary things come in PL account and permanent asset liability come in balance sheet, that way. Now, in short, how many types of activities are there in a business? Any business in the world, anything you take. So, how many activities are? 3. Operating activities, whatever business he is doing, no matter. Operating activities, then you need money, financing activities, and in all investing activities. In all these 3, there are two parts. How? Two parts? Coming and going. In operating, coming and going. That is flow. I have told you cash flow. So, in every of these 3, there is flow. In operating, cash is coming, okay, cash is going, okay. In financing, cash is coming, accepted, cash is again going, because if you take loan, then you have to refund. Similarly, and then investing activities, you put money in some asset, you purchase a building, you purchase a new project, you purchase machinery, you purchase anything, furniture, and sometimes maybe you are selling it out, then money again coming back. So, this flow is there. So, you have to remember that there are 3 activities. Can you tell me, Vishal, what are the 3 activities? Number one, Operating, good. Number 2, Rahul.
Financing.
Harshit. Number 3, done. In all these 3, coming and going is there. So all these things we shall control minutely, like the beggar controlled this 50 rupees and manage it to have 7-8 rickshaws. And we are putting this concept. I narrated the story to make it interesting for you only. He can do it, and biggest of the business of the world, MNCs, is doing the same thing. If one can do it, then from beggar to lakpati, similarly company. If one cannot manage this, then you know what will happen, lots of problems. So there is a concept, I have not taught you one thing, even in course it does not include, but I should tell you. I have told you some rules of accounting, I have told you some concept, I have told you some concept and convention I have told you in the first class. So based on this concept, convention, etc., I will tell only 1 minute, otherwise it will take 3-4 hours if you put me that side. It is not even the course, but I should tell you. Accounting standard. There is a concept of accounting standard. In India, there is Indian accounting standard. Internationally, international accounting standard, IAS. In India, there is Indes. All this connectivity you can ask me sometime, but now if I take, then this will be disturbed. But I should give a little idea. And now even international accounting standard is not being formed. Now IFRS is being formed. IFRS means International Financial Reporting Standards. So for India, now there are 2 standards. AS, you can Google and list will be coming. AS means accounting standard, Indian, for India. You can say, sir, why not I there, only AS, why? Because there is a confusion between international. The international accounting standard IAS, in Indian accounting standard IAS, there will be confusion. So India sacrificed I. They hamesha I ko chhod dete hai na. So AS for India and IAS for international. But now from 2001, even IAS is not being formed internationally, IFRS is being formed, but other IAS are still in force. So IFRS means International Accounting Standard, IFRS, International Financial Reporting Standard, international. And this IFRS has been brought to India also. So in India when it came, it is taken the name of IND-S, IND full stop AS. But in India now 2 types of standards, AS and IND-S. AS for only India, small companies, and IND-S in India for bigger, larger companies. In short, to talk in very brief. And internationally, IAS is there, IFRS is there. Now why I have brought this thing here in cash flow statement? There is a reason. In India, now talk of India only. Everything whatever I have discussed and I am going to discuss and you are going to learn, everything comes under accounting standard. I have not told you only earlier, but I did not get scope. But now I am telling you, like your inventory, I told you, inventory valuation, etc., comes in AS2. No need to get confused now, just remember. And this one comes for AS3. This one comes for AS3. And AS3 again revised. So if anybody asks you in quiz, cash flow statement comes in which account standard? You say AS3, bracket mein revised. Because if I only say AS3, you should say, kya bol rahe sir, what is it? So I gave some 2-3 minutes of accounting standards. Accounting standards. If any time course permits, I will take up sessions. So now we shall make cash flow statement, and there are 2 methods, dear students. Please, remember there are 2 methods of making this. There are 2 methods. Today I will take your performance also coming here. Each and every one will be coming and will be marking also after I teach it. Of course, after teaching, and you shall write the name also. I will put mark later on. This will be cash performance. It will be added. It will be added to your mark sheet. Done. But I will ask you after I teach you. No problem. No tension. No tension. I will not ask anything of earlier. I will ask today's only. I will check how you understand. Everyone has to come here for 1 minute, 2 minutes, 1 minute, 2 minutes, like that. So take seriously. I sent you a message also in the morning, early morning. Now you remember there. Don't get nervous, please. Don't get tensed, etc. Please live. She is getting tensed. See, there are 2 methods of preparing cash flow statement. How many methods? 2 methods. One is direct method, other is indirect method. One is direct method, one is indirect method. And I will teach you both the methods today, I will show you both the methods, and if you ask me, sir, which method is good, I will say both, any one, because answer will be same, but theoretically I have to teach every two methods. I will cover up everything today here. Let us see how much you can learn. So, direct method and indirect method, let us do here, putting the video off now, no need, because it is going to be 20 minutes and you may not like to see, and everybody is present here. So, I need not record now, but the preliminary things have recorded for your benefit. So, please watch it, I will share.